Investec has come out with a report where it expects the Indian pharma sector to underperform due to earnings-related challenges and a strengthening currency. Rising competitive intensity in the US markets also has been cited as one of the factors. Let's discuss more of this with Anshuman Gupta, who is the pharma analyst at Investec. Anshuman, good afternoon to you. Thanks very much for taking out the time. Let's start off with what the thesis of the report is and what are the challenges that you see that the Indian pharma industry is going to particularly face.
Yeah, hi, good afternoon everybody. So clearly I think we have been cautious in the sector for some time now, and we continue to believe that there are a host of challenges for the industry. Can you hear me?
Anshuman, we can hear you loud and clear. Please carry on.
Yeah. I think I guys lost. Okay, sure. So I was just saying that, you know, we have a cautious view on the sector for some time now, and we think that there are a host of earnings related challenges. We are actually, so last couple of quarters, if you see, the currency had depreciated quite sharply from 63 levels to about 74, and despite that we have not seen any earning upgrades, right? Which is very, very clearly highlighting that the base business challenges are much more than, you know, the currency benefits were there, but you couldn't still see the benefit, you couldn't still see any earnings upgrade. So clearly the high dependence on US, the high dependence on very large products in the US, and the rising competitive intensity. I mean, it's been happening, I mean, for the last couple of years, but I think the intensity of competition is not going down soon. So because of very large bases in the US, high dependence on a few products, say, you know, 20-30% of revenue coming from a couple of or three products, right, will only mean that if there is competition in those products, you will see earnings cut in a big way. Every company has a pipeline, but clearly one or two products can make a large difference. So if those products get delayed or underperform because there is more competition, I think there is significant risk of downgrades for almost the entire sector.
Let's filter it down then to individual names, Anshuman, and we'll start off with Aurobindo Pharma, on which you guys have a buy rating, and you know, what exactly is reflective in the price target that you've put out of 915 from 760?
Right, so Aurobindo has been a top pick for some time now. I think what we like is the basic business model. They do not depend on very large products for their earnings growth. Their model is about getting more and more products to the market. They could be as small as $1 million, $2 million, and maybe $20-25 million as well. But largely, the large number of launches that they have in the US every year has ensured that despite the competitive intensity in the US, the base continues to grow. And it is among the few companies in the world which has seen an earnings growth and a revenue growth over the last 3 years when the entire world, including Indian Pharma, was actually struggling. So clearly, we like the business model. The pipeline is pretty strong. The strategy is pretty good. They have done an acquisition in the US very recently, and we think that could actually surprise on the upside, both on earnings accretion as well as the kind of debt the company will have to take. So that's clearly not reflective in the stock as of now. The stock is among the cheapest in the Indian pharma space.
Okay, got that. That's an Aurobindo Pharma there. Cipla, on the other hand, you know, disappointing quarter in terms of the numbers that it put out, and as well as you know, some commentary from the management, which the street didn't take too well. But you know, according to you, most negatives here are priced in for Cipla, and a ramp up in US profitability is expected for the company.
Yeah, so I think they delivered a very poor quarter, and as you rightly said, the second half promises to be equally bad. But the way the stock fell almost 25% from its recent peak clearly suggests that most of the negatives are priced in. They have a very solid US pipeline going. If you see the last 1 year, they have had one of the best approvals among Indian pharma companies, and they are still pretty small versus all the other guys, just at $400 million revenue with virtually no profitability as of now. So once this business ramps up, and they've guided for a very strong ramp up in the second half. So we continue to believe that if US business continues to do well, I think it can take care of some of the challenges that we have seen in the near term. Clearly, the challenges that the company highlighted may not last for in FY20 or FY21. So we do expect that there could also be some recovery on those fronts, and to that extent, the valuations are among the cheapest after Aurobindo from a large cap Indian pharma coverage.
Anshuman, you are not bullish on Sun Pharma. Now, why is that? Is it a valuation call? Is it a waiting for resolution call, or is it something else?
No, I think if you see, I think we really like the strategy the company has undertaken on the specialty side, but by nature the specialty business that they have is something that will clearly take some time to actually ramp up. So we are not saying that we don't like the business model. I think business model is one of the best among Indian pharma. I think the challenge is on valuations, as well as I think the risk of earning downgrades in the next year or so. The strategy is right, but like a typical brand strategy, the ramp up is typically slow in the US. You will have to hire sales force, you will have to do marketing, you'll have to persuade doctors to actually write your drugs. So that's a new strategy, and that's a new business model for Sun. And the ramp up, is quite uncertain. So the kind of valuations the company commands today because of that, we think that those are not justified, because even the risks are going up when they are actually undertaking a specialty business model.
Interesting. And you have a sell call on Lupin as well. Adding to the pressure would be, and I don't know whether you think of it that way or no, but as Ramesh moving out or resigning from that post, does that only add fuel to fire? What's the rationale behind you not liking Lupin?
So I think Ramesh moving out, he was there with the company for long. I think it's a sort of non-event. It doesn't reflect on the company fundamentals clearly. Or rather, we don't have anything to say really that whether Ramesh moving out has any bearing on the company's performance really. What we would like to highlight is that Lupin is among the most expensive stocks in our coverage. We think that the stock has the company has a weak pipeline in the US. Near-term earnings are going to be under significant pressure over the next couple of years. So that's a major call on the stock, and if you see, it's trading at almost 25 times FY20, which is even more expensive than a Sun Pharma today. So we don't think the kind of setup it is right now, it can command those kind of valuations with significant earnings downside risk.
Your last call is on Dr. Reddy's. You've raised your target prices on that one. Talking about vulnerability due to high dependence on key products, and pricing in all the positives at these current price levels. So what would the valuation from the stock be now?
Yeah, so the stock currently is trading at about 22 times FY20. Now the key highlight here is that currently, the kind of run rate the company is doing currently, needs to double next year to actually achieve those estimates. And those numbers can be achieved if they get these couple of approvals going for them, which, there are two reasons which we are not sure whether that will happen, because one is clearly these are complex products like Nuvaring and Copaxone, which have been delayed for months now, and there is no visibility that they will get approved even next year. So there could be delay there. Secondly, I think the kind of competitive intensity we think for both the products will be much higher than what Street is anticipating. So clearly we believe that the kind of earnings accretion that will happen from these two products will not be as much as the Street believes. Secondly, I think you also have to take care of the fact that there is likelihood of any further delays in this product. So if that happens, clearly we are not ready to give full earnings multiples to these earnings, which are like one-off, and they actually may wane away in the next couple of years.
Okay, got that. That's an in-depth analysis of the pharma space, and in particular all of the stocks that we discussed, Dr. Reddy's, Sun Pharma, Aurobindo Pharma. Thanks for joining in, Ayushmann. Anshuman, I'm sorry. Appreciate you taking out the time and being here with us.